Vineet Bhatnagar, Managing Director of Phillip Capital, joins us live. Vineet, good morning. Thank you for joining us. Vineet, what started as a spark of short covering last Wednesday certainly has gained some serious momentum this week, and Nifty is now up 200 points from the recent low. Do you think this is as good as it gets, or now there is a distinct shift in the trade orientation?
I think there is definitely some elements of pressure on the downside that has got let off. For instance, the data that we get from the exchanges about how the trading behavior of the local HNI is at the moment. We have seen that from net short position, for example, in the Nifty futures, they have gone net long to the extent of $75 million. FIIs, however, on the other hand, have been liquidating their longs in the Nifty future. They continue to be net longs right now to the extent of about $150 million or so. But about 3 weeks ago, it was as big as about 800 million US dollars. So FIIs have been reducing their long positions in Nifty futures. Local retail, other than the prop traders, have been going long. There is some momentum that is visible, but we believe that unless Nifty continues to trade quite conclusively above 5750, we may still face that as a very stiff resistance.
So, Vineet, would it be fair to assume that perhaps in the near term, at least 5500 around, or rather thereabouts, we have a bottom in place for the index?
Okay, there is one way to look at it, that 5500 psychologically is a Nifty number that everybody has been looking at. But if you look at how the put distribution is as far as Nifty is concerned, it is still maximum at around 5400. One is also reminded of the fact that FIIs in the last week or so have continued to accumulate Nifty puts, and their Nifty puts are to the extent of $3.2 billion now. So they have continuously added protection. What is heartening and therefore no sudden slide that we anticipate is the fact that there is no liquidation or sell-off pressure even in the underlying cash market by the institutional clients. So protection has been put in place. There is no liquidation that is seen in the cash market. There is not long position in the Nifty future by FII. So it's looking all right in terms of no sudden slide off. But whether it will go beyond 5800 right now, it's difficult to say.
Vineet, here's some data for you. Yesterday, Infosys 3250 or 3250 call saw a big bump up. Do you think somewhere markets are pricing in another 10% for Infosys now?
I think so. In fact, that is something that is looking very strong, both from the option activity as well as the way we are seeing the future Infosys future activity. So there is continued strength that we are seeing in Infosys in particular, and that's one of the stocks that we have highlighted this morning for strength.
Okay, here's some interesting data for our viewers. If I look at the 5-day change for Infosys, for Wipro, for TCS and for HCL Technologies, suddenly Infosys and Wipro are outperforming TCS and HCL Tech. Now Wipro has got re-rated after numbers because they came out with a strong Q2 IT services guidance. Similarly, Infosys was languishing on 12th of July, which is the result day, closer to 2500, and from 2500 it has gone all the way up to 3100. So it's been a one-way rally for Infosys after they came out with the Q1 set of numbers. Vineet, whereas the management of Infosys has not changed their guidance and they've not changed their management commentary for FY14. So what are market men getting so excited about?
I think, it is always in anticipation of what lies in store ahead. That's one. Second, there is an improvement in the sentiment, which is a subjective, element as far as trading is concerned. From the point of, from the point in time when Narayan Murthy has taken reins of the firm. Thirdly, on 2 or 3 occasions after immediate announcements of quarterly results and the guidance that came out, which was perhaps below the street expectations, the hammering that this particular stock saw was actually quite unprecedented and also perhaps extraordinary. If you recall, even in January, when the stock was battered, out of shape, the next trade that came up was actually a pair trade of long Infosys, sell TCS. So that kind of anomaly has always been there in this particular stock, and I think now is a time when there is a consistent one side outlook on the stock, which is supported by the new management or the new board. It is supported by the fact that the rupee is still on the weakish side, and finally that the major geographies which are their client areas such as US and perhaps to some extent even Europe are showing continued and consistent growth. So it's a factor of all of this.
Vineet, if you have to carve out a structured strategy for our viewers, what will be a structured or a pair strategy at the current juncture?
Not necessarily a pair strategy right now, unless of course you want to do something in the metal space, sell a Hindalco and buy Tisco, but clearly it's not a pair strategy that one is looking at, because I think the way the strength is showing up selectively, I think it will only make sense to do some trading only on the basis of the way the strength is visible. We are still inclined to take gains on the long side of the market, because on the back of the short covering related spike up, on the back of improvement in sentiment or the results that have come out for the quarterly, I think it is good to play on the long side selectively on some stocks.
Vineet, what about the banking pack? Because the bank Nifty has sort of recovered in yesterday's session, but is that a move that is sustainable?
I think that's going to be a tricky one, and I guess one should only look at that particular space only from the trading perspective, primarily on account of the PSU related drag that is still visible to us. But that, yes, again, even in that space, there is some, beaten black and blue kind of names that can be looked at for long side of the trade, such as Dana Bank, UCO Bank, even Yes Bank for that matter. So, there is some, there are some trades that are possible for a quick return.
The star has to be Tata Steel, and there is some degree of short covering which is clearly evident. 261 rupees for Tata Steel. It is the top traded counter on both the exchanges. JP Associates 33. Escorts, impressive move. It's trending up, or it has trended up already, up about 6 rupees. That's roughly a 8-9% appreciation for Escorts. Syntex Industries yesterday appreciated on strong volumes. Today the volume action is there. I'm simply pointing out some of the top traded counters if there's a trend there. Well, there is definitely a bias towards private banks, because Yes Bank, IndusInd Bank, that pack is looking okay. HDFC, which is India's biggest mortgage company, that is also marching towards 800 rupees. So there is some reasonable price action even in the quality end of the market. Vineet, so at the current juncture, what is your big contra idea? What would you like to call as a high risk, high return idea?
High risk, high return idea, I guess, there is some, some possible trade on names like Ranbaxy for that matter. It has moved up quite significantly, although I'm not very sure from the fundamental point of view whether the risk is really out of the way as far as 1 year out, 2 year out is concerned. On the other hand, not necessarily by capturing the risk element, but on the high return side of it, I think there is a tremendous upside that is possible in Cipla. which seems to have come out of a very good consolidation zone after a long time. So going long on Cipla could actually be the trade of the day.
I just want to check on Natco Pharma as well, and that stock will just come up for you on your screens. Meantime, that stock is holding up about 2.5%. 627 is where it is. The gainers largely include most of the metal names. So Tata Steel has surged up 7.5%. You've got JSW Steel, SAIL, all these names are looking pretty strong. HPBP, both those names have held up well, and Tata Motors as well has been making a strong move. A 3% bump up coming in for Tata Motors, whereas the DVR is holding up by about in excess of 3.5%. PTC being the other one, it's a 4% move on that one, and JP Power as well is looking decent with a 2.25% move. Vineet, what happens now to the pharma pack? Because there have been pretty divergent trends within the sector itself, wherein Lupin has sort of, cracked after its earnings. On the other hand, Ranbaxy, Sun Pharma, these kind of names have actually held out.
I think, yet again, even in this particular space, it is important to start differentiating between, what could be a sustainable revenue stream, business model, etc. And therefore, to start looking at pharma as a pack as the best defensive story in times of challenge is a very simplistic approach that all of us have to start, looking beyond. And in that respect, names like Sun Pharma really stand out as a name that you would like to have in your portfolio, whether it is a 1-year horizon or even a 4-year horizon. So from that perspective, it is important to start differentiating between, the whole space, whether it is a Biocon or a Glenpharma, Pharma or Lupin, Cipla. It is becoming, very, very important. DRL is another one that one has to look out for in terms of what they have been able to achieve on the back of, the team that they have put together. It may not be visible immediately in the short run, but it is important to start looking at even the large cap names within our pharma space to pick out the few winners of tomorrow.
Okay, Tata Motors, 303 for Tata Motors now. In fact, in terms of point contribution, Tata Motors is contributing significantly to the Nifty today. In fact, 7 points are coming only from Tata Motors, 3 points are coming from ICICI Bank, and about 3.5 points are coming from Tata Steel. Tata Steel has a very low weightage. Vineet, at the current juncture, do you think the risk-reward ratio is favorable in buying into Tata Motors? It's a cheap stock. Arguably, it is one of the cheapest stock. JLR is doing well. For the quarter gone by, they've reported margin expansion, and if the economy turns around, which eventually it will in 2 or 3 quarters, the domestic CV business could also, stabilize.
Yes, I would tend to agree with that argument, and I think one of the things that many of us have started to agree is the fact that the quarterly earnings that have come out from a diversity of sectors and stocks recently have not been as disappointing as what we all thought. And therefore, going forward, if in the next couple of quarters there is an economic recovery which is visible on the ground, names like Mahindra and Mahindra, Tata Motors would definitely benefit. And in that respect, it is good to be long in names like Tata Motor and M&M.
Interesting moves in the auto space as well. Real estate, Vineet, that is the other space which has been in bits and starts showing you moves. I mean, you do have names like an Oberoi Realty, HTIL, or for that matter, DLF, which have been holding out. Any trade there, or do you think this is just a technical move?
I think it is a technical move because it is one of the sectors which is not very well. It does not lend itself very well to a great analysis, if you will, in my own personal opinion. And therefore, I would only call it, a momentum trade that at best could be taken advantage of. So in that respect, if some stocks within the sector are holding out or are showing any momentum on the back of technical indicators, one could do a trade, but we do not have a long idea, or for that example, even a strong short idea on this sector right now.
Between Bajaj Auto and Hero MotoCorp, which one would you buy? Which side are you leaning? One is a domestic story, the other one is a export story. Bajaj Auto now drives 35% of the revenue from exports, for Hero MotoCorp currently 0.
We are still leaning towards Bajaj Auto as the revenue mix or a business model.
And any reason why you're leaning towards Bajaj Auto? Because if the economy slows down, the consumer preference for 110cc bike will improve.
Not only that, I think it's a combination. It's the business model of whether it is 70-30 or 65-35. I think if there is visibility of a growth around the continent, which is essentially South Asia and ASEAN, somebody like a Bajaj Auto with the mix that they have put together is more likely to benefit in a balanced manner, whereas the other one is really in one way the proverbial all eggs in one basket kind of a situation.
Vineet, good chatting with you. Really appreciate you taking the time out and joining us today.